Good morning, dear viewers. My name is Shiv Kumar from the authors of www.akshayaship.com or Lotus Advisory Services at yahoo.in. Welcome to this shoot on August 20th, 2013, Tuesday at 9 a.m. The equities, as expected, is drifting lower. Nifty futures expected to open at around the 53.40 mark. INR has weakened further this morning to 63.75, is an all-time low. Traders holding sells in rupees are expected to book around 63.80 to 64 levels, where huge profit booking is expected to settle. Over the medium to term, we expect the rupee to go up to 65-66 rupees to a dollar. A few events on the international calendar are being watched out very closely. On Wednesday, we have the FOMC Fed minutes that are likely to be released tomorrow evening, which will give an indication as to the direction in which the Fed is likely to go ahead as far as tapering of stimulus or QE3 is concerned. The markets are already expecting tapering down from September end onwards, and the prices are being factored in as far as the international markets are concerned. Two other data to watch out this week are the unemployment claims and the new home sales data later this week. We'll now come to the individual commodities family. First, we start off with bullions. Bullions for the past couple of days in international terms are struggling to break above resistances. Gold hit a high of 1379, 1380 yesterday and now drifting at around 1366. Strong support is seen at 1350 to 1348 to be more precise. Next breakout above 1380 could be expected. On the MCX terms, trading at around the 31,150 mark will face strong resistance at 31,500. And support is at 30,800 to 850 levels. Weakening today, the INR is going to support the bullions to that extent, although in international terms it's stagnant at the same levels. Silver is trading at 23.20, below the pivot of 23.20. It hit a high yesterday of 23.6 and corrected down just like gold has done. Support is seen at 22.8. Positional support is now seen at $22.30. On the MCX exchange, trading at around the 51,150 mark, resistance is at 51,500, 51,800 and 52,000, and support is at 50,600. It seems a little bit dicey for the past couple of days to enter into trades as far as bullions are concerned, the MCX, due to volatility in the INR. Any weakening in INR is going to push it higher, though in dollar terms it is slightly reducing a little bit. So wait for fresh entries for bullions. Energy. Crude is now trading at around $107, struggling to break past the $108.5 to $109, which in NYMEX crude is a strong resistance. Any further positional moves only on a close above $109 is expected. On the support side, strong support is at 105 and 104.50. On the MCX, the contract for August has ended yesterday, and the September contract is now trading at 68.25. Support is at 67.60 and resistance at 68.50 to 6900. This weakening in the INR is only going to support the MCX prices, although in dollar terms it's stagnant at certain levels. Inventory this week is expected to be mixed. Okay, no clear indications are available. The Egypt crisis is still weighing on the prices in the international markets and holding it at around the $107. Natural gas saw a major upturn yesterday over the past couple of trading sessions from the 208, 210 level to 223 levels. Trades positive above 221. Short-term support is seen at 218 and medium-term support at 215 positional support. Resistance are at 226 and 228. One can long natural gas in the MCX market or supports with a tight stop loss of 218 or positional traders of 215 for targets of 226 and 228. On the international market, trading at around 3.43. Any break above 3.50 is the next bullish sign. Weakening in INR is again supporting the natural gas and crude prices. Copper is facing strong resistance at the LME at $7,400 to $7,500 mark, trading at around the 7,300. On the MCX, it closed above the pivot of 468, hit a high of 471 to 471 half yesterday. So long as it sustains above 468, it is expected to be positive till 472, 475 in the short term, and positionally a decisive close above 472 could see 480, 485, 488. Immediate support is now seen at 466. Of course, positional support can be seen way below at 449.50. Intermediate support is at 460. One can buy copper on dips closer to support with tight stop losses for taking advantage of the positions. Of course, like all other base metals, the QE stimulus expected to be announced tomorrow in terms of 4 MC minutes will have a bearing, and hence traders are advised to hold minimal positions till the release of the FOMC minutes tomorrow evening. Lead and nickel and zinc continue to be positive and looks to be buy on dips. Nickel is now trading at around the 941 mark. Immediate support is seen at 936, weekly support at 929. Any close above 950 could take it, 947 to 948 could take it up to 955 to 960 levels. Buy on dips is recommended. Lead is most positive among all base metals, trading at around the 142.5 mark. Immediate support is at 138.50, weekly support at 135. Sustains and closes above 143 for 2 consecutive days, likely to go up to 146, 148 and 150. Zinc also remains positive at around the 125 mark. Immediate support is at 124, weekly positional support at 120.50. A close above 126 could take it up to 127 to 128 levels in the days to come. Aluminium is sideways, hence it's preferred to avoid aluminium as of now. All intraday trading calls will be posted on our website at www.akshayaship.com. Trade in your inquiries at lotusadvisoryservices@yahoo.in. Have a safe trading day. Next photo shoot and updates will be given consecutively on Wednesday and Friday this week respectively. Thank you.